Happy Friday, traders. It is Friday, October 30th, 2015, 8:01 a.m. Chicago time. Thanks for joining me as always. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Key news overnight was the Bank of Japan holding steady. Asia starts off with a risk-off sentiment, selling off as the Bank of Japan keeps the policy unchanged. That quickly reversed as weaker numbers that came out following that announcement led to speculation that stimulus is likely by the Japanese government. Eurozone September unemployment came in at 10.1% versus 11%, much better or slightly better. Fed's lacquer came out at 6:30 Central. He is a hawk. He was the FOMC dissenter on the last meeting, reiterates view that current and expected path calls for higher interest rates. I think he must be in Colorado because he's probably smoking up or something. I just don't see the Fed hold to the years-long sentiment that the Fed is not likely to raise rates. There's just no room for that at the moment. Other banks are still stimulating, not seeing how that could help. September personal income came in at 0.1% versus 0.2%. Personal spending came in at 0.1 versus 0.2 as well. September PCE core came in softer, another reason for non-stimulus, 0.1% versus 0.2%, year on year, 1.3 versus 1.4. Now, remember, it's the end of the month here today, so we're likely to see some adjusting, some action, some movement near the close of the day. This is also fiscal year end for quite a few companies. Looking at the day ahead, we're getting U.S. Chicago PMI at 8:45 Central, 9:45 Eastern, expecting 49.4. 49.4 prior is 48.7. Caution on this number, though. It does come out at about anywhere after 8:42, just 10 minutes after the open. It's a subscriber-based number, so generally we get the move. We also get the rumor, and then we get the public announcement. So be careful with this one. Don't wait till 8:45 if you're holding a position and you don't have room. At 9 Central, we're getting University of Michigan confidence. The final number expecting 92.5, prior is 92.1, and then at noon we get the Baker Hughes rig count that gives us an idea of what's going on with the oil producers. As far as speakers today and other events, we have Fed Speaker Williams at 9, and we have Fed Speaker George at 10:25. And that's pretty much it for the day as far as the calendar is concerned. Let's look at what was expected yesterday. So yesterday, adjust these. So yesterday, the primary hypothesis was to open in range around value, and the expectation was it would spend most of the day in the prior day's range. There was an auction that was cut off on Wednesday with the FOMC on the close. So the expectation was that this high would be taken, the high at 2085 quarter, but we got close to it. We got within 3 ticks of it early and then couldn't take it out before the rotation down. We ended up doing just that later in the day. The expectation was for it to chop a little bit, test that, fall back in, and then ultimately catch catch this point of control. There's a high probability of a point of control tag. In situations like this, just didn't have it in it. Yesterday was a neutral day. We broke lower, left a weakish low. You could see here there's very little taper. It's just a very sort of a blunt low of day, which makes it weak. We left a pretty decent taper on the high. Most of the trading day was spent in a very blocky value area between 83 quarter and 78.50. And you can see the range there. It's not a very smooth curve. It's full of ledges. There were quite a few opportunities, decent opportunities yesterday. Knowing coming in with the hypothesis for a choppy day set us up to take advantage of back and forth action. The key trades that came out that set up for me yesterday was a loss right here, a pullback for a push towards that high like I talked about just now. That didn't work out. And then the pullback to 80.50 right here to the mid for a break of the IB low. Remember, the IB high or IB low, these yellow lines, the first hour, the IB high or IB low are expected to break 97% of the data sample that we have, which is a big data sample. It's 1900 days. In that data sample, 3% of the time we stay inside of the yellow bands for the entire day. That's called the IB stat. It's different than the overnight stat. And so the trade here, the pullback here was gunning for this IB low, and it got it. The next opportunity didn't present itself till late in the day on this run up, and it just there was quite a bit of liquidity down here, a pullback, and then it pushed to new highs. Neutral is not expected. Neutral days account for neutral. Again, means we broke the first hour's low and the first hour's high. Neutral days and all days, neutral days account for about 35% of days where the market breaks higher low. Again, we're not trading our gut. We're not trading what we feel. We're not trading what we think. We're trading statistics. We're trading probabilities, and we're looking at what the market is likely to do given the different scenarios. Okay, so yesterday the primary hypothesis was mostly correct in that it stayed within the prior day's range for most of the day, and it did break the high of the prior day just as expected. It didn't do it in the order expected, but the market does what it does. My goal is not to make it fit what I expect, and my goal is definitely not to be right with these hypotheses. The hypotheses are there for the sole purpose of giving me a plan and to something to measure the market against for as far as performance, to just make sure that I have an idea of what to expect and why versus what it does, and there's a lot of information in that. The overnight session, the Asian market opened, and it was fairly strong in China. We get the Japan disappointment here, and then the numbers following that out of Japan were pretty poor. They're expecting stimulus there, and then from there Europe opens, and we are basically coming back. The profile is very interesting shaped. It is somewhat of a Gaussian profile, but it does have multiple distributions. You don't see that often. You don't see a profile that looks like that. The market's basically accepting a range, dropping, accepting a range, dropping, accepting a range, and currently it's trading beneath the mid of the session against the point of control, and it's trading right just inside of yesterday's range, which puts us in a weird in an unclear position. We're trading inside of yesterday's range, outside of yesterday's value. Yesterday's value area is valid, so we're going to be looking out for how this treats this 2083. and how it treats the 2078, 2078.50. We want to see how this test, if it starts to move lower, which is what's expected. We're beneath the overnight point of control. We're trading at 85.75 right now, with the overnight point of control at 87.25. Again, the mid of the overnight session is above us. We're trading the lower distribution of that triple distribution in the overnight. So we are crossing into the LVN and coming into this lower distribution. As you can see here, we're battling this area right now as the market prepares to open. So the expectation coming in is fairly standard. The overnight session tested higher, unable to maintain the higher price with the stocks closed. So we're looking for a return and a test of a value high. So we're looking for 83 as an initial test. Again, it's at 86. We're looking for 83 responsive as hypo 1. If 83 does not hold this up, which is not likely, it's likely to take out this overnight low. The expectation is it would test the point of control at 2080, 50. 2080.50, this becomes the next target. Not expecting huge fireworks today. Ultimately, the expectation is it would come down, retest this, and then start to move back up and through 86.50 to continue the bull run. A quick thing I want to show you, and I'm going to try to keep this as brief as possible. Again, I want to remind you that we have crossed above the 2030 LVN, and we are trading in this big meaty area, this high volume balance area. We're right in here. So this is likely to create a choppy environment. This is a high acceptance area. Look at the amount of volume that has traded in this area. Generally, this is going to be seen, this is likely to be seen as value. This is likely to be seen as value, and the market's likely to trade here, so both sides will likely have interest. Notice the use of the word likely, likely, likely. We do not want to come into the market with a fixed mindset that dictates how we should think. We want to keep our mindset open to the possibility that we are wrong, and we're just playing by what the auction theory is, and that is we move from low volume node to high volume node, stick here. If we have the if after we rotate here we build enough energy to continue, great. Then you look for the next low volume node, which is all-time highs 2117. Recall that the Nasdaq has already done that work. If it cannot find that energy, if prices are too high and it needs to advertise for buyers, then it's likely to move down into that 2030 area again. So two things can happen. I'm not predicting which. All I'm saying is I know that in this area we have a ton of volume. We have a lot of balance here. You can see that we had a ton of it back here as well, and so the expectation is we would likely be stuck here on a low volume, low range trade for the immediate time period. There's nothing here until the non-farm payrolls next week to move us out of this area, in my opinion. And note how the range has collapsed. Yesterday's range is right in there, right up against what we would consider to be the most common range, 9.25 points. The range has collapsed, and volume was very light yesterday. So these all play into the fact that we are in an uptrend, and we are in the point of control in a micro composite and high volume node, composite high volume node, micro composite point of control from back here. We are back in balance. So keep that in mind for today. This means slow down, take your time, and just wait for the market to set up. Don't feel like you've got to do something with your day right away. Just wait for the market to determine, to show us which side is pushing better, and then look for a trade in that direction. But again, don't hold your targets too far. Don't try to squeeze 10 points out of a trade in the S&Ps. This is the type of environment where it's likely to go back and forth, back and forth. So keep it tight. And it's in this environment, it's better to be calculated and take multiple setups than to try to sit there, take one setup, and try to squeeze 10 or 15 points out of it. I'll leave you with that. It is Friday. Watch your risk. Again, you never want to go into the weekend with a hole in your pocket. So just take it easy today and bide your time. If you need to get in touch with me, futurestrader71.com. Hit the contact button on the menu. Drop me a note. I'll do my best to get back to you. Good luck.